Ever hear traders mention terms like volume is surging, or this stock has a low float, and wonder what that even means? Or maybe someone said short interest is rising like it's a red flag, but you weren't quite sure why? Today we're unpacking 3 powerful market metrics: volume, float, and short interest. Once you understand these, you'll be able to spot early momentum, recognize dangerous setups, and understand supply and demand like a pro. Let's start with trading volume, possibly the most mentioned metric in technical trading. Volume measures the number of shares traded during a specific time period. It's not about price, it's about how many hands the stock is passing through. Why does this matter? Because volume confirms price action. When a stock breaks resistance with high volume, that breakout is much more likely to hold. Low volume breakouts, they often fail. Think of volume as market conviction. High volume equals strong conviction. Low volume equals weak or uncertain conviction. For example, let's say stock XYZ jumps from $10 to $12 in one day, but with below average volume. That's suspicious. Maybe it was just one big buy order, but if the same move happens on 3 times the average daily volume, that's real demand. Volume also helps us identify trends, spot fakeouts, and read reversals. Some traders even base their entire system on volume analysis alone. Next up, float. And no, we're not talking about swimming pools. In the stock market, float refers to the number of shares available for public trading. It's not the total number of shares a company has. That includes restricted shares held by insiders or institutions. Think of it like this. A company might have 50 million total shares, but only 15 million are actually available to trade on the open market. That 15 million is the float. So why does this matter? Because the smaller the float, the more explosive the stock. When a stock has a low float, any sudden demand, whether from a news event, social media buzz, or earnings surprise, can cause the price to skyrocket. There simply aren't enough shares to go around, and basic supply and demand takes over. But it works both ways. Low float stocks crash just as fast. That's why low float stocks are the favorites of day traders, momentum chasers, and unfortunately, pump and dumpers. If you're holding a low float stock, you're in for a wild ride, and it's not for the faint of heart. But here's a trick. If you see a stock moving, always check the float. Combine it with volume and you'll understand why it's moving and whether the move has legs. Now let's talk about short interest, the percentage of a company's float that's currently being shorted. When a trader shorts a stock, they borrow shares, sell them at the current price, and hope the price drops so they can buy back cheaper and return the shares, pocketing the difference. But when many traders do this, we can measure it using short interest. It's usually expressed in 2 ways. Percentage of float, for example, 25% short interest equals 25% of the float is shorted. And days to cover, which shows how many trading days it would take short sellers to exit based on average volume. So what does this tell us? A high short interest means many traders are betting the stock will fall. But here's the twist. It can also be a setup for a short squeeze. When too many people bet against the stock, any positive news, even a rumor, can force short sellers to panic and start buying back their shares. That buying causes the price to rise, triggering more shorts to cover, creating a feedback loop of upward momentum. That's called a short squeeze, and it's how some traders made millions in hours, and others lost just as much. But not all high short interest stocks will squeeze. It often depends on float size. Low float makes it easier to squeeze, volume needs to be high, and catalysts like earnings, upgrades, or viral attention. Short interest isn't a magic signal, but when combined with volume and float, it tells a powerful story. Let's now tie this all together. When you combine volume, float, and short interest, you unlock a deeper layer of market behavior. Let's walk through two examples. You're watching stock ABC. It has a float of only 4 million shares, a short interest of 35%, and its average daily volume is around 300,000 shares. Suddenly, volume spikes to 3 million shares by noon. That's 10 times the average. This is a potential setup. A low float, heavily shorted stock with unusual volume? You're now looking at the early stages of a possible short squeeze. But be smart, wait for confirmation. Is the price breaking out of resistance? Is it holding the move? Are the candles clean or full of wicks? If the answer is yes, you might be witnessing a rocket in real time. Stock XYZ breaks above resistance, but volume is weak. The float is high at 300 million shares, short interest is only 3%, and volume is below average. This is probably a fake out. There's no urgency from buyers and no short squeeze fuel. This move might fade just as quickly as it started. Quick reference. When all three align, volume surging with price equals strength. Low or declining volume on breakout equals weakness. Float, low float equals volatile upward potential. High float equals less responsive. Short interest. High short interest and rising price equals squeeze setup. Low short interest equals limited squeeze potential. Let's recap what you've just learned. Volume shows conviction and strength behind moves. Float determines how reactive a stock is. Short interest reveals market sentiment and the risk of a squeeze. When you combine all three, you gain context, and context is everything in trading. Professional traders use these tools not just to trade, but to know when not to trade. If this helped clarify things, take a second to like, subscribe, and share this video. We're here to help you cut through the noise with clear, honest trading education. This content is for educational purposes only and does not constitute financial advice. Always do your own research and consult a licensed financial advisor before making investment decisions.